So would you rather have started your new industry and the next generation of financial infrastructure with porn or with, actually just enabling international payments to, dissidents in other countries? It's like, I got to tell you where I fall there, right?
GM, good morning. Welcome to The Milk Road Show, the daily crypto show that's as smooth as a well-aged whiskey, minus the hangover. I'm your host, Jay Hamilton, and today we're talking about the levers that are impacting innovation and adoption necessary for blockchain to be used by billions. We all talk about it all the time, but when is it going to happen and why is it not happening faster? Here to guide us through exactly that today is Dean Tribble, CEO at Agoric. Dean, welcome to the show.
Thank you so much for having me.
Super excited to have you because you bring a veteran perspective to an industry that we do not have enough silver hair in. You're a silver-haired fox, and that's what we love to see. And when we zoom out for a minute, where we're at right now is we've got about 550 million people that own crypto worldwide. Now, that's just crypto ownership. Only about 50 million of those are monthly active users on chain. 50 million. That's it. That's less than 1% of the global population. Crypto is going nowhere if we stick at 50 million and we can't go beyond that. So we need more adoption. You've built tech companies before. You've participated in a lot of TradFi's first usage of tech when they used Web 2. Is crypto's adoption slow or fast when you compare it to other tech adoption in the past?
It is odd, but I would say it's actually, on par. When internet, to my mind, kind of really went live in like 92, when you could finally do commercial stuff on it instead of just sharing, academic documents. Even now, if you go and ask, so what's the value prop of the internet? People are a little bit confused, right? And so it took a while for that to take off. I remember in 97, which is now 5 years later from the internet starting to take off, being in there with banks explaining, no, here's why the internet's a good thing. Here's why it's an important thing. Here's how maybe finance should move on there, and going in, 98, building brokerage information systems. And we just started getting brokerages kind of going, internet, let's dip our toe in. And by the time, we started a project like with Schwab, and by the time we left, it was over half their revenue. It ramped very fast, but it's one of those things where, like these elbow curves, it's really seems slow until it ramps really fast.
What is in our way right now? What are the issues that are causing friction when we talk about adoption? Or is it not that, and we just don't have the apps because we don't have the innovation?
So to me, those are in some sense connected. They're almost the same thing. What's in our way is, I won't say usability. It's sort of user focus, if you will. The model that, oh, you're going to come in to do ETH, or you're going to come in to do Solana, and all our users have to buy into our credo, and all. It's like, no, you can get a few thousand people to buy into your vision, but if you want to get mass adoption, you have to solve their problem. And chain abstraction is now this growing narrative where people are both articulating that and realizing that, oh, yeah, we got to solve the user's problem. And as people now realize that, that gives me strong optimism for the run up, the next run up, the next bull run.
I want to just chat a little bit about paint the picture of the developer situation right now on chain. And maybe you could compare it to Web 2. How many Web 2 developers versus how many? Because that's when we talk about this need for more innovation in order to solve users' problems. Well, you can't really have innovation unless you have all starts with the developers and the builders.
Right. Yeah. And indeed, the more developers, the more diversity of experience you get. So you get actual UX experts to improve the user experience, right? So, if you think of here's, the 2,000 developers in Cosmos ecosystem, and 2,000 developers in the Polkadot ecosystem, and maybe, it's not actually a lot more developers. Now it's sort of grown a lot this year of Solana developers. And then, the big dog of 6,000 was Electric Capital's estimate of developers that could build a credible application in Solidity in Ethereum. 6,000 is this really small number. Now take that bubble and shrink it down to this tiny little dot. And then you've got Web 2, there are 17 million JavaScript developers. So I can't wiggle my hands enough to have it appear on screen how big that is compared, that's 3 orders of magnitude larger than 6,000 developers or 18,000 developers all told in the crypto ecosystem. We're just a really long way from engaging most developers at being able to build anything. Now, those 17 million developers, some of them are, they're low level web developers. They can hook up buttons, they can do various things. But, 5 million of them can build credible apps. That means, there's like, more developers within 20 miles from here than there are. Well, I'm in Silicon Valley, so maybe that doesn't count. But there are more developers in Denver that can build a web 2 application than there are crypto developers and probably crypto customers in the world.
What happens if we have millions of developers in crypto?
Let me turn that question around. What does crypto have to be such that we will have millions of developers? Right? Because it's not like they wouldn't show up if there was something for them. It's just really hard and really cumbersome and not obvious to these people how they would capture value from this, or how where we're at in Web3 helps solve the problems that they're trying to solve for their customers, so that, the guy down the street who's building a web app, or the gal down the street who's building a service for the local college or a local business is going to use Web3 to make that application more powerful, more interesting, serve their customers better. And that's not just about, oh, we need more apps. It's we need better ability to produce those apps in a way that can reach those applications and users.
Speculation is a great use case for crypto. No, there's no debate, right? It is not the use case that is going to lead a bunch of developers to say, oh, I'm going to go work over here in this industry, right? What's going to lead a bunch of developers to do that, or lead anybody to do that, is just everyday apps that are fun, enjoyable, that matter in their life, that solve their problems, not their speculation problems. Speculation isn't enough of a problem for
Yeah,
most
and
people.
to be clear, crypto really delivers also on payments and cross-border international payments and a few other important use cases, right? So speculation is most of the value, and it's a lot of what you hear about, but there's real value there as well.
Where is there opportunities when, you were in those meetings talking to Schwab and the big banks back in the late 90s, telling them about the internet? It's so hilarious. That's not that long ago, right?
Yeah, yeah. Well, and then, 5 years later or 10 years later, it's telling him, "No, no, cloud is okay. Let me tell you why the cloud services providers are maybe doing a better job than you, at protecting customers' information,"
Yeah.
right?
So you keep having the same conversation with the same customer. You're just telling them what the next tech to jump to is. When you're in those meetings, or when you're looking, like, where are the industries where there is big opportunity for innovation in from crypto and from on chain, that you see that maybe aren't having it yet, or that it's early?
An important way it's early. I mean, an interesting thing about crypto is it started with payments, and it started with interesting DeFi and sort of online on-chain financial applications because, frankly, that was easy, right? That's also valuable and important, and there's a lot of money there. But if I could just do something that's entirely on-chain, that means I just need software developers and the ability to deploy, and and Twitter or other services to to reach some end users to start doing this. That's really valuable. And some people deride crypto because it's all about financialization. My counter to that, right, is video discs, CDs, DVDs, all of these things, and the internet itself. They really grew quickly and exponentially because of porn, right? So would you rather have started your new industry and the next generation of financial infrastructure with porn, or with, actually just enabling international payments to, dissidents in other countries? It's like, I got to tell you where I fall there. So what industries could benefit from it? We're so early that it's just about all of them, right? When we look at it, okay, crypto is now, well, I don't know what the number most recently is. There was, the last number I saw was $1.2 trillion in liquidity currently scattered across a gazillion different chains in ways that might not be very accessible, but that's still a lot of liquidity. By comparison, the US freight industry, just freight, stuff on trucks and stuff on ships, is $1.1 trillion in market cap, right? And that's just in the US, right? International is more than that. And so it's one of those things where there's clearly huge value in getting blockchain with chain of custody, with the ability to do insurance, with the ability to do high integrity. The World Economic Forum estimated that getting chain of custody in blockchain for freight would raise world GDP by 5%, right? We're talking
What?
tens of trillions of dollars,
Are you
right?
serious?
I am serious. 15% increase in world trade and 5% increase in GDP is a really big
That's
number
a really big
for
number.
something that crypto has not yet even touched, right? And or just barely touched. I mean, there've been various efforts, but that's one where that's hard, right? Freight is hard. There's a lot of built-in infra. There's a lot of, I mean, you're talking about something that's actually quite decentralized, right? In the United States, 90% of the packages transit on a truck from a company that has less than 10 trucks, right? Because diesel engine maintenance does not have economies of scale, right? And so it's incredibly decentralized and incredibly economically inefficient and would really benefit from crypto. And it's going to take, another 10 years to get that in there simply because, you're talking to people who maintain, trucks and they've got, clear deliverables and stuff they need to do. And you've got to have a good solution in order to drop on them and really improve their life.
I really never thought I would have a conversation about freight as a narrative in crypto, but sorry, keep going. Keep
Let's talk
going.
about something nearer to home, ticketing. Right? People, we work with Omniflix in the Cosmos ecosystem. They've got, deals with they're an India-based blockchain, but they do, awesome stuff across the several ecosystems, producing videos and providing NFT ticketing for events. And, they're growing that retail NFT ticketing world in India. Internationally, ticketing is $85 billion in revenue, not market cap, in revenue a year. That's a really big number. And Web3 has barely scratched the surface. Now, 5 years ago, you still had paper tickets, right? So 5 years ago, it was just like freight. There was this, insurmountable obstacle that it doesn't matter what I've got digitally. I go to the thing and there's a person that's collecting a ticket and stuffing it in a box. And that was just a problem. Ironically, COVID came along, everyone moved touchless, QR codes became the thing of the day. So now almost every event you go to, from high school football games on up to NFL, from, the local choir concert to Taylor Swift, you've got, you can hold up your ticket on a QR code on your phone, or if you have to, you can print it out. But, if you've got a mobile phone, you can show your ticket and they'll scan it and get you right in. And that has really removed a significant barrier to being able to do tickets that use Web3, where I can have it so that there's resale of these NFT tickets in a way that the original artist gets a portion of the proceeds. And I can have, hierarchical NFTs that have the ticket and then the drink tickets and the VIP parking. And I can separate this out and give it to my friend because I'm walking or whatever it is, right? And so we're just at the cusp where some of those obstacles have fallen away, but we haven't been able to step in and take that over and, and leverage the payoff. But 85 billion a year in revenue is sitting there, waiting for someone to tackle Ticketmaster, right?
I'll take a piece of that. I'll take a piece. I think the DOJ is already going after them. I think so. We got all the potential here, but when you use Uber, it's so easy. It's so simple. You open it up on your phone. I don't have to sign a transaction. I don't have to do any of the things that you have to do in order. You use multiple apps most of the time when you're using on chain and crypto, right? I got to have my wallet. I got to have whatever my app is. I'm connecting. I'm blindside. All these things. What do we need to do in order to solve that?
So the important thing for this next growth round is people have realized that that's an issue. That's the chain abstraction challenge. Users want to use crypto assets and services independent of the underlying infrastructure, right? And you've got when I sign into Uber and Lyft, A, it's easy, but B, I have no idea whether it's running on Amazon or Google or Azure or whatever, right? I just push button and I get a ride. Or, if I'm using a food app, I push button, a hamburger gets delivered. And I never deal with the maps and I never deal with the payments. And, but even the simple thing, I can go to Europe and swipe a credit card in some random place and I get a hamburger, right? And the fact that behind the scenes was vast, interesting, complex financial shenanigans with hedging and foreign exchange and multiple transworld. I don't care. I swipe a credit card and get a hamburger, right? Now, in crypto and in finance, right? So a year ago, May, Before that, you maybe didn't care which banks were involved in processing your money. But suddenly Signature and Silicon Valley Bank and Silvergate and apparently any bank beginning with an S, right, was starting to look shaky, right? And suddenly people cared about those particular counterparties, right? And then Swift got hacked and people cared about that particular transport. So it's not that people don't care about those intermediaries. It's when they care, they care. But when they don't, get the heck out of my way, right? Don't let me have to deal with it, right? So when I swipe a credit card and get a hamburger, I don't think about which bank it went through, except on that one weekend, right? And so the same with crypto, right? If I've got USDC and ETH and I want to buy, a bad kid on Stargaze, I want to push button and get it. I don't want to have to do 6 signatures over 5 chains in order to convert all this stuff and go through. Well, do I use this marker to that marker? I've got to have that. And the thing that is missing in crypto, right? So first off, now a thing that was missing was this chain abstraction vision, the fact that users actually wanted this, right? Because the tribalism got in the way of that. And people now realize that that's bad and their users do not care, right? Or their potential customers do not care. But the other thing that's missing is we've now laid the tracks. We've now connected all these blockchains and we've gotten modular to create an explosion of yet more blockchains that we will connect. But you have to hand carry your assets across them, right? We've got roads, we have no cars, we have no trains, right? You've got to hand carry it across it. In the case where I want to push button and have my USDC over here, buy me an NFT over there, and then take it and go put it in that market on yet a third place, that process, that programming across all these different chains is what we call orchestration. And that's really hard. And that's the thing, that in Web 2, that's largely been solved. That's why you get Uber and Lyft and you can push a button and get a car, or you can get a hamburger, or you can get a flight. It's because there's software infra that can reach across and orchestrate all the asynchronous activities happening on all these different services. But to a first approximation, Agoric uniquely is bringing that to Web3 and just can't do it elsewhere. It turns out to be really hard. What ends up happening is you see a bunch of chain abstraction vendors, people talking about it, Near, Particle, One Balance, et cetera, right? And what they're really doing is they're doing some subset where they can reach across multiple of these and maybe they can move your funds, but it's running off chain to do that stuff on chain, right? And Skip, right? They run a thing to figure out off chain what the route is, and then they can present you transactions that you will sign to go through the route, and that's great. But the process is not being run in a Web3 way. It's not being run in a smart contract running on a chain. And that's where we all want to get to. That's what you need to get to the next level of an economy where well, we can talk about what the next level of economy is like, but that's what you need to get to in order to get that next level of economy. So that's where we're at. That's where we're at and where we're going.
The Milkman, big fan of orchestration, really believes in it because you're solving a big problem. Whether I don't know if this either tees up your next level economy question or how can builders get involved in orchestration? How can people use orchestration? What does that look like? And then maybe lead into next level economy.
Agoric.com/orchestration. Come and join our program. We just rolled out the core of it last week. And the APIs will be rolling out steadily over the course of this year as we add more and more functionality and more reach to get from not just, our chain to the Cosmos ecosystem, but across multiple connectivity mechanisms and so forth to EVM and beyond. And so, yeah, they should absolutely come in, join the early access program to be in a cohort of applications building on orchestration.
Okay, amazing. What's the next level economy?
Actually, I'll answer another part of that orchestration question first. Orchestration is not just for new applications, so that's clearly critical, right? The application of get my USDC from one chain to buy something another turns out to be new. No one can do that, or rather, it's people are just starting to come out with solutions to that. But it also adds value to existing applications, where if you're like, I don't know if you're familiar with liquid staking applications where I take Atom, I lock it up, I now get yield from the staked Atom, but I also have a token that I can use to represent the value of that staked Atom so I can participate in DeFi while still getting yield and double down and get more value out of my asset that is providing security for Atom or build for Agoric or what have you. And The thing is, those liquid staking sites, the first thing you do with this new token that is, your liquid staked atom, is you take it to another site in order to use it in some other DeFi thing. When they tell you that, here's how you can here's how you can make use of this, they give away the customer, right? They've lost customer attention. By using orchestration, they can have a smart contract running on Agoric that can reach out, make the account on that customer's behalf, automate the sending of that money, get deploy it in a pool, bring back the steps of that pool, keep going on to do richer and richer activity automated on behalf of the user, right? That ability to have not just a connected world you can move stuff manually across, but to have a world in which rich programs can do things, right? Can do things across these chains. So now that next level of application is not just payments, which is where we started with Bitcoin, or now we've got some amount of cross-chain payments, which is great and really valuable, but it's just the baby step. It's long-lived, multi-block, human time relationships with an economic activity, right? A mortgage is not a one-time swap, right? A loan, a collateral position, a lending position, borrowing against my assets, a ticket. All of these things are outside the box of do your transaction inside of a 5-second block, right? The blockchain nature of all these smart contracts where everything has to start and end within the same block is limiting what people do. And it's one of the main obstacles to reaching the use cases that the mainstream the mainstream users are going to care about, right? They care about a ticket. And it better not be that I bought the ticket, but when I show up at the show, it no longer knows who I am or no longer knows that I have this right. It's I have an ongoing relationship that, that is done when I've published the pictures of getting dragged off stage for dancing. So that's the good. I got him to break character. This is good.
Oh, I mean, you had me with the porn analogy 10 minutes ago. So
It's important that people know where we came from, right?
yeah, it is. I'm now gonna put on my bumper sticker that I work in the first tech that didn't start with porn. So
That's
feels like a win for me. Dean, a really great episode. I really appreciate your time.
Thank you so much for having me, Jay. This was fun.
You've got great humor and great wit combined with that silver fox hair. I want to know, those of you listening in today, of the industries we talked about, are you interested in any of those? Are there any we didn't talk about that you'd like to hear us talk about more on the show? I gotta know, is there anybody that's in freight that's listening to our show? I don't think so, but if you are, give me a shout, because that's amazing. And remember, none of this is financial advice. Investing in crypto is risky, and you should only invest what you can afford to lose. If you want to support the show, smash the like button, give us a review wherever you are listening, subscribe, comment, and we'll see you next time. Thanks for listening, and everybody have a wicked awesome day.